Hi and welcome back to Trading Tips with Jim as we are heading into week 32. On Thursday there will be inflation numbers, and for those following me over years know that I predicted how inflation will go up, later go down, and as I've been saying for some months now, inflation will go back up. I have reason for this because I believe energy prices are going to rise quite high again, and oil is on an upturn. It's soon ticking on to $83, and there is nothing indicating that it will not push upwards to 90 or more. Personally, I think that we will hit very high energy prices, and that is why I've recommended over and over again to use the chance to get into oil when it was low. The first time I recommended oil was back when oil was down at 19. For those who remember, that was even sold for a single day or two in minus, believe it or not. Back then I said buy for whatever you have in oil because this is a lifetime opportunity, and oil went sky high. It was up at 130, I think, at the highest, before falling down. Biden released tons of oil. And it turns out he did so speaking to China first before doing that from the strategic release. Millions upon millions of barrels trying to push the oil price down. And oil price fell down to 70. But as far as I know, US has not used opportunity to refill their emergency stock. Now oil is above 82. And it's above the selling price, actually, the average selling price when oil was released in heavy quantums into the market. OPEC's been tightening the oil production, and all of this seems now to start bear fruit as energy is going up. On top of this, we had some good economic data, and that pushed the oil price further up. And as I said, I believe oil will be on a short rally. Personally, I position myself again into oil stocks. As I told you, these stocks, they will keep paying nice dividends, and I think they are for a rebalance. Yes, they might be a little boring if you compare to Nvidia, AI, or whatever of the stocks that really has been rallying over the last few months. It's a little boring to sit in an oil stock only ticking up a few percent now and then. But in the name of trading, you want to have at least a part of your portfolio where it is somewhat secure. And last week, Nasdaq did finally have a reaction back. It was doomed after all sorts of buy signals being way too high. Nasdaq fell 2.84% last week to 13,909 and is currently back under 14,000. And if you look at the charts, we can clearly see that most of the stocks are turning down from the top of the trend. In general, this indicates that they should continue to go more down. But on the good side, most stocks are in an upwards trend, and the correction is just a natural one. They will find lots and lots of support at the bottom of the trends. You can check your charts at stockinvest.us to find your ticker, and you can see the chart, and you can see the trend, and you can see where your stock is currently at. That will give you an idea in general. Just look at how the price line is moving. Your brain is an amazing tool. Watch charts is one of the best tips I ever will give you in this podcast series. You as a human and your brain is an excellent tool for pattern recognition. Is how it became and how our brains evolved. Pattern recognition is a huge part of it. And by looking at the charts, you will instantly learn a few things just by looking at them. And at Stock Invest, we tried to make the chart as useful and readable as possible, trying to make it as easy as we can. Coloring the line with red when it's overbought on the relative strength index, and green if it's oversold. And there is something about the dimensions as well to give you a better idea. So it's maybe the best tips as I can give. Use charts for what it's worth. Watch them. They will give you an idea where is your stock currently at and where is it heading. And most stocks, they are heading further up but currently they have a small reaction down from the top of the trend. First, if they start to break the trend, we will have an issue because that might be a warning of a much deeper fall coming up. Well, remember, Dow Jones fell by 1.1% last week to $35,065 points, just above 35,000 for Dow Jones. One thing that we like to watch here is the amount of buy signals and sell signals, because they will give you a general idea where the market is. And for many weeks now it's been very high, and I told you over and over again, when it's this high it can go even higher or it can have a fall. It will be volatile, it's just how it is. Currently 35% of all the tickers that we analyzed that are qualified for these signals have buy signals. Is still very, very high. Can be good, can be bad. You have to make the decision yourself. Nasdaq has fallen a little bit back. It was 14-week 30, is currently at 34, while New York Stock Exchange is also a little back, down from almost 50 to 40. London 24% buy signals, and Tokyo 33, and Shenzhen, China at 33 as well. So if you watch these signals, we see that we are still in the upper part, and if you watch enough charts, you will see the same thing, that we are reacting down from the top of the trend, and that top was hit 2 weeks ago, week 30, when the stocks were at their best prices, most of them. Some stocks are still moving at a quite good pace, and much of it has to do with quarter results. And this week Disney will be the main topic. I think it's Wednesday. Disney will release their quarter results. The expectations are so. Disney has been struggling a lot lately, but it's a major company and all eyes will be on Disney. Along this, I think it will be Palantir and a few other interesting companies today, and you can expect, based on the quarter results, that they will move just before, under, and for sure after quarter results are out. That is why I always told you, keep an eye when your stock has quarter results, because that will be a day of movement. Last week, as you know, we have the new $1,000 challenge, where I got Intercept 3 weeks ago. It's already 3 weeks ago I got Intercept. I said I thought it was not the best time to buy the stock, because better choice would be to get it around 10.50. But anyway, to honor the deal of getting into the stock on a Monday, as this podcast is released on a Monday, so you can follow every single trade, I went in to Intercept at 11.23. Stock fell just as it should, down to 10. I think it was down maybe 10.30, 20 low, heading upwards. All of this was expected, and I was really hoping last week, because Intercept had quarter results, that would push the stock. But of course, Intercept posted very good quarter results on a very red day and week. That didn't boost and push Intercept as high as it should. If it was a green day, you could expect the Intercept to move much higher. I think it was 11.70 high. We will get back to Intercept and the $1,000 challenge a little bit later, but let's continue with what's going on this week. So there are quarter results. Oil, as you see, is moving up. Gold was also pushing up. You know that I love oil and gold, because I think these two to be a steady base, and I like to have a part of my portfolios into gold and oil. Personally, I purchased physical gold when gold was around 1600, later a little bit more at 17 and 1800, currently at 1971, but it was above 2000, and I believe gold will just continue to push upwards. I put into gold as a hedge against inflation. So far it's been working somewhat okay. I haven't made the best gains, but I haven't lost any either. It has been following better than the inflation. So if I get out of all my gold positions today, I will be in a good shape. The other thing that we also follow is, of course, the 10-year treasury. I told you, every time this move up, the stock market move down. And 10-year treasury is currently at 406, was moving up from 3.8 to 406 quite fast last week. And as I told you, excuse me, on Thursday there will be inflation numbers. Oil price is going up, and energy and oil is such a huge part of inflation. That is why I warned you early on now. In my world, inflation is not going away anywhere. It will tick up in pace soon. You will read tons of reports that everything is under control now. Everything you hear in economics every day saying how they have won over inflation. But the fact is that if you compare over the last 2 years, the inflation is quite high, and anyone going to the shop or the restaurant can really see the insane increase in the bill. Yes, they have to adjust a little bit to stay competitive, because right now the market, the job market is not attractive anymore. We've been waiting for this for a quite long time now. In this podcast series, I told you how these things would work out, but I have missed, because I was expecting more than half a year to see weakness in the job numbers, but finally they are here. Confirmed last week, jobs are now not as tight as they used to be, and I expect to see huge wave in unemployment as we move forward. It's a slow position. We know that the US was able to lift the debt ceiling, and when they lifted the debt ceiling, that means that they will just continue to push insane money into the economy, trying to keep things as good as possible until election is over, meaning a year ahead. So you can just expect more spending. Much of this spending will, of course, cause more work, especially in the governmental sector, that it will continue to increase, while we will see more hammock in the private sector. That is my guess. On top of this, of course, we have the AI revolution, which slowly is eating its way into the economy. Personally, I think that AI in the long run will be very good for the job market. We always fear new things, how they will play out. But they will open up for a lot of new things. I'm not fearful of AI. I think actually it's one of the things that can bring the human race forward. And playing around a lot with AI tools myself, I just have to say I love it. I am fascinated by it. And many of you, if you are very new to IT and data, it may look just totally amazing, but we can still see quite many limits in AI. They still have far way to go to really get there, but they are getting efficient, and for sure they have made my day 10 times more efficient. I cannot say how nice it is to have a small discussion with AI on topics which I want to solve. And if you know a little bit about the topic, you are able to figure out when the AI is not useful at all, because sometimes AI is just pushing a lot of rubbish. Many of you might be sitting in AI stocks or jumped on the train very late and now start to see some decline. What you have to understand is that it will take a lot of time before AI generate money. The first one to really make money of this is cloud services, it is chip makers, all of these who provides hardware or access to the AI, they will generate the most. The rest of them who says they will come up with a business model, paid model for AI tools, they will compete and are competing with hundreds if not thousands of tools yet, and they will just keep pushing. They will cause many of the companies to go early on bankrupt because they are scaling up their stuff way too fast, they're scaling up their cost way too fast, and they will not get into the income stream they believe. So that will be the second tip of the day. If you are into AI, be a bit strict and careful where and what you invest into, because some of these companies are just they have an idea, they're pushed up by their idea, and when that balloon blows up, it will be a heavy fall down to earth, because in the end everything goes down to the earth. Gravity works that way. We are back to the basics. But for some of these AI companies, it will be a brilliant long future. You might be a little off, wondering what exactly am I talking about in questions of all these AI things. If you try to use AI a little bit and if you follow how it develops, you will see how nicely things are coming together. Either if it's ordering, if it's help desk, if it is service question, even within programming, computer programming, you can now have AI check your code. And for some parts, especially Python, it's quite good. It's not so good for a few other languages, but it will start helping you. And all of these things will put pressure on the huge market. Many people have been struggling writing a sales pitch. Now you can just ask the AI to write a sales pitch. And in many, many cases, the sales pitch will be as good as an average agency. The best will still be the best, doesn't matter what. But in general, you can now do a lot of things yourself, and these services will just continue to push up. And as they come up, you have to reduce prices to stay competitive. We see that on ChatGPT. ChatGPT has started to increase the amount of tokens. They have started to increase the length of prompts that you can have, etc., etc. It's a natural thing because there is so many platforms popping up. But enough about AI. It was just a warning to you. If you're into AI, you should look into the business model itself, because as I say, there will be a huge fallout in AI. Whoever is left will have a strong platform to move on. And for some companies, AI will make increase in profit. My best guess is that it's service related. It is businesses working in info tech industry. They will be able to replace a lot of manpower with AI tools, or let's call it software tools. That happened before. It's still happening. In some cases, they use the increased profit to increase their product portfolio, meaning that they will hire more. So we never know exactly where it will, but I'm pretty sure that many companies now will be able to increase their profit margins, working smarter as such. We might dive into that later on. But as I said, Thursday there will be inflation numbers, and sadly I believe that they will increase. I think I saw that the expectation was that the inflation will come in around 3.7, and you will hear them scream, oh, we are able to get the inflation down. But with increasing energy prices, and we are heading into winter, I can only see inflation start to push back upwards. On top of this, there is so many other things happening in the geopolitical world. We had chip issues with China. Some strange move from US caused China to respond back, so there is a war over these things. We have the Ukraine war. The Taiwan conflict is a little less, but it's still there, and I think that it will escalate again. There is still dividing of the world. The politics is pushing for a dividing world. Now we can see that Africa is also a part of that plan. I think it was Niger, who now is on a possible war. And so many of the African countries, especially down south, South Africa, and that part, say that they are parting way with the West. They are tired of how NATO and US has been acting on the African continent, Libya, etc., etc. And for those following, know that many of these countries are joining BRICS, which is the alternative trade organization, consisting of Brazil, Russia, India, South Africa, and China, etc. And few more of countries are joining. These things are splitting the world, sad to say, getting more protectionistic. And at some point you will see that the goods will not travel as easy as they have. We always have tariffs and tolls, etc. On goods, and that's been a war between even EU, US. Canada, US, US and China. There's always been a smaller fight about the tariffs, trying to protect their own production, etc. But now it is getting much more serious. I think that we here in the West, we are way too dependent on the East still. Now we're working frantically on shifting industry over to Europe. I can see that here in the Baltic countries. Lots and lots of European countries are establishing their business in the Baltic countries now, trying to be less dependent on Asia. It's a good investing tips if you have options to look at smaller companies, especially in the Baltic countries. The Baltic exchange is a very small one, but some of these companies will be a real winner over the years to come as more investments is flowing in to these countries. And there's many countries in Poland as well. Poland is doing very good. France, Germany, they will depend a lot of these companies for the production. To finish that argument, I think that sadly we will see this division of the world will have two strong negative effects. One is the sharing of goods, and when we get less good, prices go up. So it's an argument why I think inflation will continue upwards in, of course, relation to the energy. Saudi Arabia is using oil as a weapon as well. They threaten now and then with cutting production to hurt the Western economy. It's a little catch-22 as they are dependent on income themselves. I think I saw just today or somewhere else, I saw that Saudi has been hit hard by the low oil prices compared to just a year ago. So we are in a situation where I think the inflation will continue upwards. This is a game that you can play in the stock markets. You have to find which stocks are less dependent on inflation. Some stocks who has direct effect of inflation, why there is the buying cost of goods into the production or the selling out, because you cannot just increase prices forever. At some point the user will say that it's enough. And you will have a fall in your sales. You can only increase prices as long as there is a certain demand for it. It's called price sensitivity. So a lot of things will happen, and I think that sadly inflation is here to stay. I don't think any of the conflicts will go up. I think that conflicts will continue to push everything that we see in the media. We see how NATO behave, we see how US behave, we see how China, Russia behave. All of them. The tone is still very aggressive. It means that my tip, which has been for more than I think it's 2 years now, invest into weapon industry, because they will just hammer on with extreme profits, dividends, and stock prices as well. General Electric is one stock that really has been enjoying the war and will continue to do so. So war industry, oil and gold still seems very safe alternatives. That was a little bit background for all of what is happening forward, because it's nice to look at 1 week ahead, but it's also very nice to try to see what will happen as we move forward. So what I see, to sum it up, I see that the stock market is in generally good shape. Everything, or most of it, is in upwards trend, but they have a natural reaction down from the top of the trend. So far there is still no major risk. Everything indicates that it will continue a little bit down more, so I will not be surprised if you're heading for yet a red week. Should be volatile, a little bit up, a little bit down. And I think especially Thursday will be a very important day for stock markets. May end with a brutal red week. Hopefully not, but we will see. Slowly things will correct downwards to the bottom of the trend, and it will be a huge pickup opportunity, I believe. I warned you about the EV. I told you when EV and Leo and all these were very low. I think Neo was down at 7. I said buy, and I bought myself, of course. Now enjoying Neo up at $14-15, was even up at 16. But as I said last week, you should expect a reaction down for the EVs because they are very high up, very little support below. They can easily, like NIO, can easily fall down to 12, I would say, before having a reaction upwards. If that happens, I will use the chance to pick up more because the general trend is very, very good. So for the week, it was, I believe, again, it should be a turbulent week. I think it might end red as well. In general, what I see is that some of the stocks that hasn't moved are now moving. It's very classical signs. First the big stocks moves, then the second. Now you see a lot of these third companies start to move a little bit as the investors are trying to find good big stocks that hasn't taken out their potential yet. Some of them are clearly, in my view, undervalued, but it's a personal view. I think Sumerica, which I mentioned over and over again, and personally have myself, currently trading around 21 cents. I think it is a good opportunity. But we will just have to see, as we know, we're heading into the $1,000 challenge, to end the podcast with that. Getting Intercept 3 weeks was not the best choice. But I wanted to get started with the $1,000 challenge, where I'll try to make $1,000 move as fast as possible and as high as possible. As I told you, we will only invest into very, very high risk. So we stand to lose a lot, but we also stand to win a lot. In the beginning, we will only do single stock by single stock until we have hopefully generated enough cash. Then we'll start to divide into two to reduce the risk a little, play the game a little bit. But we are 3 weeks into the challenge now. And where are we at? I bought Intercept CPT Intercept at 11.23 on a Monday 3 weeks ago, and sadly what I thought would happen happened. The stock fell all the way down to 10.20, 10.30 or something, and then started slowly to push up. And you heard me say that that was the very good, in my opinion, good buying opportunity to buy. I have the chart up for those of you who is watching on YouTube or audio device. Just brought up the chart for you now, where you can see that it's Intercept, and it doesn't look very, very good. There is a few things pointing in the right direction. First off, it is very soon to have a buy signals. If it continues up a little bit today, it will have buy signals also from the long-term moving average. Currently has from the short-term moving average. Relative strength index is somewhat low, but there is nothing in the volume indicating a move, very fast move upwards. And if it moves upward, it has resistance all the way to 12. As you know, I am heading for the $14 targets. That's where I want to be. As it's move up around 13.70, I will be on the alert, believing that it will have the opportunity to push all the way up to 14. So I was hunting for 20-30% in the stock, currently sitting with a minor loss. Should probably be around 3%, as the stock is on 10.85 now. That means I will keep it also in this week's portfolio, because I was checking a lot of charts and I didn't see any obvious candidates to switch it with. So just be patient. I know that we are heading into the 4th week of the $1,000 challenge, still sitting in a slightly loss, but I will stick with Intercept for a little bit more. It just needs to push a little higher, and I think that we finally can get the minor rally upwards to 14,000. But I am not proud about being 3 weeks into the challenge without having a profit to show for it. Hopefully that will come. On the end note, we will have a small talk about the trading booth. How are we? What are we doing? As you know, I'm building a trading booth, fully automated trading booth, where my idea is very simple. It's for all of you who wants easy to use tool. Of course, first and foremost, it's for me because I like stock market, but I do not have the time for trading. I cannot sit all day trading because I'm doing a lot of businesses, and I really want to enjoy my free time. So I cannot sit all day at work following stocks. There I need to develop new things, hopefully for you to enjoy. And later when I get back home, I have other things than just to sit watching Nasdaq, New York Stock Exchange. I am in Europe, which means that I'm on the opposite time zone, so I cannot sit and watch that all evening as well. I'd done it before, back then extremely successful, but it had a huge cost, which I'm not willing to put in again. So the obvious thing is, of course, building a trading boot, and that's what I'm doing. I'm building a trading boot which trades by signals created by me, and it is doing it 24/7, or at least as long as the markets are open, without any interference. So far it's doing actually very well. Didn't have any profit last week, more or less the same, uneven, but it was a red weeks in the market, so I'm very happy that the boot at least managed to stay put. You'll find the boot at getagraph.com. Click on Shark. You will see a small link to Minimi and Maximi, and these are just two different type of trading. One, Minimi, is $1,000 which is invested. I think it's giving some 3, 4, 5% since I started it. But the one thing, if you have very little money, and most people do, we cannot get into a day trading pattern, meaning that we're trading same stock too often, because then your account will be locked. You're not allowed to be a day trader unless you have $25,000 on your bank account. So I created two accounts, one with $1,000 on them, one with 30,000 on. So you can watch them both, see how they do, and if you have any question, you can just ask me. But currently it's doing good. I had a week vacation last week, as I told you, and I had in the podcast, you saw me from Riga. I had to spend 4 days in Riga after the car broke down on the way to change the air condition compressor broke. Put such a tension on the belt that it was stalling the car, so there was no option other than having it changed. Cost 4 days in Riga, but had a very nice time. I might even possibly post a few pictures on the YouTube version later. The most joy, of course, was the end of the weekend, because then I was attending the big metal detector rally in Lithuania. 650 crazy metal detectorists like myself, we were enjoying a day in the field, trying to find some treasure, and some guy was lucky. He found a spearhead and an axe from the Middle Age, 12th century, according to the archaeologists. It was a very nice find. May even post a picture of that. Personally, I found some coins, and of course a lot of metals from tractors. These are big fields, so there are some remains left of all the harvesting over all the years. So it was a lot of metal, some coins, nothing really valuable, but still very nice weekend indeed. The point of telling all of this is that you should also have a hobby or do something that you really like, because trading is highly emotional, and you probably experienced more than once. You are so happy when things go up, you are on a good streak, and then you get into a bad streak and you start losing a lot. And very often you do the wrong decisions. When it's going bad, you just make even worse decisions. So having some solidity in your daily life, either it is family, either it is going to the gym, doing metal detecting like I do, reading a book, whatever you do, you should have it, you should enjoy it, because trading is not everything. I'm here trying to help you increase the chances for good trading. And you heard me say that I think that it will be a volatile week, so you can think for yourself, how will you play that? It's good to have a volatile week if you're a trader trading on the ups and the downs and the swings, and you can look for support resistance levels. You can trade between psychological number like 10, 12. This stock is moving between 12 10 and 12, and there is a lot of things you can do. If you are less active, you are just having a small portion of your savings in the markets, trying to gain a little, well, it might not be the week where you want to be too active, and you want to make sure to have a part of your portfolio in something that will hold a little bit better, because nobody really knows where the market will go. It can easily go fast up, and it can go very fast down as well. It's the name of the game, and that is what we try to avoid, and that is why we use stop loss. Remember that one, the one tip which I think I have repeated most ever in this podcast series. Remember to use stop loss. It's such a good thing. Trailing stop loss, you put in a percentage or a certain dollar amount. The stock stop loss will only follow the price upwards, never downwards. So as the stock goes up, the trailing stop loss will also go up. So if you set like $5 trailing stop loss, the stocks move from 10 to 11, let's say from 100 to 110, so your stop loss will become 105. If the stock is lucky, you continue upwards to 120, then your stop loss will be 115. You don't have to think you can be outside doing your gym, doing your walk, drinking your coffee, whatever else. If the markets fall back, your stock fall back, the stop loss will be triggered, and at least a part of your profit will be saved. I think that makes for it. Nothing more to sum up. $1,000 challenge is still on. It will continue all this year. We are 3 weeks into it, currently sitting at a small loss. Hopefully when I will be back next week, I can report that we are in the green, and we can continue trying to make $1,000 grow as much as possible. As usual, I hope you will have a super week. I hope it will be a green week by the end of the week, and when we speak next week, that your portfolio will be at a better place than it was when you listen to this podcast. Until next week, just have a good week. Bye.
Remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling.